Hi, I'm Christian Easterday, CEO and Managing Director of Hot Chili. We're one of the few senior copper developers in the world, developing a very large advanced asset at low altitude on the coastline of Chile.
Christian, good to see you, sir. You have been on a bit of a world tour and just got back into Perth. I imagine feeling exhausted, so I do appreciate you taking the time to do this call. Seen the news today. Tell us all about it.
Yeah, no, very exciting day for us. We've been working for nearly 18 months towards this large resource upgrade. So Costa Fuego, our combined asset that we've been working on for more than a decade on the coastline of Chile, about 18 months ago, we tripled the size of that and it moved to 724 million tonnes, comprising two very large-scale assets right next to the Pan American Highway, right next to a port, about 0.5% copper equivalent, primarily open pittable deposits that we're studying to put into production. So we've invested significantly. We've more than doubled the drilling into the porphyry discovery Cortadera, which has really transformed our resource book. So that drill coverage at Cortadera has now increased to over 92,000 metres of drilling that was put in primarily last year. So the resource upgrade that we've announced today has added 30% to our resource inventory. We're sitting just under 1 billion tonnes now on the coastline. Really importantly, one of the key aims of the program that we undertook last year was to really lift the component of indicated resources, and we've achieved that in spades. We've lifted indicated resources to some 725 million tonnes. So over 80% of our resource base is now in indicated classification, and a really key part of that is that the high-grade component of Costa Fuego, material that's running more at a grade of 0.8% copper equivalent, that is now 1/3 of our metal inventory. That has lifted over 50% with the drilling that we put in over the last year.
Okay, fantastic. Okay, so that's a great update. Meaningful change there on the resource. This is because you're working towards this PFS, which is due Q3
Correct.
of this year, right? So what more is there to do between now and the PFS coming out?
Look, we've got a very active program. We've got very strong treasury, about 32 million in the bank, about another 10 million of inflow expected this year. And what that means is we have a fully funded 18-month growth and development program, about $10 million being directed towards exploration drilling to drive further growth. We're looking at our land holdings that have never been drilled before outside of our principal deposits. So that's very, very exciting going on in the background. And we also have another $10 million of drilling going towards another resource upgrade, which we'll see in the third quarter in association with that combined pre-feasibility for this project.
Oh, that's interesting. So with that 10 million in terms of the resource, so again, what type of drilling? Where's that going? What's that going to do in numbers that people understand in terms of meters drilled, and which of the assets are you doing that at?
Yeah, look, we've got two diamond drill rigs on the ground, one RC drill rig. We're hoping to lift that to 4 rigs this year if we can.
Good.
We'll be moving around quite, I suppose, dynamically between resource growth and exploration targets, and trying to optimise the utilisation of those drill rigs. We have a lot of targets that are near site to the Cortadera porphyry discovery. We still see further growth there. We see some near site growth at Productora, but also quite exciting in this resource that's been put out. It's not just our Cortadera and Productora deposit. We've just added our first high-grade satellite, San Antonio, to the inventory. It's only small at this stage, 4.2 million tonnes, but the grade is 1.2% copper equivalent. It's from surface, open pittable and shallow. And we have another high-grade satellite in Valentina, a couple of kilometres away, and we have further growth to go on those high-grade assets. So it's fair to say that adding a lot of high-grade inventory to Costa Fuego is a key part of this next 12 months as we push towards that next resource upgrade.
Right. So I'm going to bounce around a bit because I'm trying to understand how the picture kind of fits together here. Right. Obviously, Glencore coming on. I think you've kind of got the 60% offtake over the line now, haven't you? Is that all done and dusted?
Yeah, correct. We just announced that about 3 or 4 weeks ago. So was a big milestone for us. We've been negotiating that for 6 months. I think the last time we spoke, Matt, we just brought them in as a strategic investor. We'd announced that we were going to be negotiating with them an offtake arrangement. Now we've completed that. So that is an offtake partner for 60% of our concentrate on the first 8 years of production. And to put that into context, we're targeting a 20 to 30 year mine life here. So what that has really meant is that we have the world's largest offtaker as our partner, as our largest shareholder, and we've kept 40% of the offtake unencumbered to negotiate with other offtake partners when we get into project financing discussions at the end of this year.
Right.
And most importantly, after 8 years, the entire project is unencumbered. But certainly, Glencore, to have them as an offtake partner in advance of a pre-feasibility is quite some feat.
So remind people why you did that deal again, because obviously they've come in as a, well, I think it's just under 10% equity holder. But what's the deal look like? Because you could sell concentrate into the market any day of the week. But what did it give you in terms of doing that deal the way that you structured it?
That's right. Well, look, what it really does is align the interests of Hot Chili and Glencore. We have a project that I guess was attractive to Glencore for a number of reasons. Firstly, the size of the asset. We're a top 10 undeveloped resource globally. Secondly, that size of the asset gives good leverage on the copper price, which is reaching record highs at the moment. It had leverage to growth, not just on the resources that we were growing, but also on the exploration portfolio. And lastly, and not least, was the quality of the concentrate. No arsenic, a clean concentrate, a premium product. So what that does for us, it means that the component that we would sell into the benchmark pricing each year, the pricing that's determined between the largest refiners and producers every year, that component of our production was already locked away with the largest off-taker. It's a very strong position to have going into project financing.
Right, but that's kind of okay. So, but you needed it for that's the bit I want to get to. You needed it to give you some sort of credibility and certainty around the project financing in that sense, because, like I say, you could sell concentrate any time. There's a big market for it. We're moving into a massive deficit on copper in terms of supply demand. So that's why you did that. What does it do for them precisely, in the sense that are they, for you it's a kind of hedging, for them it's a what? Do they pick this up as a discount, or are they paying market?
No, I think for Glencore, to put your hands on a book of concentrate in the future that has no arsenic, you're talking about a material that is less than 15% of future supply is carrying no arsenic. So that material in the market at the moment fetches anywhere between $120 and $160 a tonne premium. So given Glencore's blending capability for concentrates carrying higher arsenic, that becomes a very important product for their trading book.
Okay, understood. Okay, and like I said,
for us, Matt, more importantly, that's a very, very solid endorsement of the project and its credentials. This is in advance of a pre-feasibility. I don't know many offtake agreements that have been done without a pre-feasibility.
Very few. No, absolutely. So in terms of just looking further down the line, obviously an 8-year agreement, quite, it's nice for you, and then it gives you some optionality, given this is a 20, 30 year life of mine type project. What do you do with the other 40% between now and then? That's just sold into market, or do you look to get some certainty or security over what that?
Well, it really keeps that component free for spot offtake agreement at spot market. That means that we're able to negotiate with other off-takers, and off-takers are an important part of any financing package to consider. What's really, I suppose, pleasing for us is that since we executed that agreement with Glencore, we've had inbound interest from other very large off-take groups. So I'm sure that you probably have also seen that the streamers and the royalty houses are very busy at the moment, competing with the off-takers. There's a myriad of alternative equity financings that are going on at the moment, which means that traditional debt and equity to project finance large developments such as we have, suddenly the equity side's starting to get skinnier and skinnier because of the activities of the streamers and the off-takers and the royalty houses.
It's a very interesting dynamic at the moment, as I say, with the royalties and streaming, because they're the new kids on the block, as it were, compared to the way it was maybe sort of 10, 15 years ago. Do you think the industry will start to see a different type of pricing from them? Because they lend you the money up front and they get a discount on purchase at the back end, or they make the margin. They make the margin at the point where they kind of pick up the whichever commodity it is, in this case copper. Do you think, given the way the market's going, miners are going to be able to negotiate better terms from those guys, because they're going to need to be competitive as supply chain constraints kick in, as potential premium prices for products start to happen? I'm sort of intrigued about the dynamic there.
And Matt, what you're seeing, some of these deals that are going on being signed. Let's just take the streamers for example. The Franco Nevadas, the Wheaton Preciouses, and the Osiskos of the world. It's getting very, very competitive. And when you see these type of deals, 65% of present value paid up front on 15-year mine lives, those are unheard of. Some of the deals are actually negative IRR when you actually sit down and do the calculations for the streamers. And what that tells me is that the streaming houses, and indeed the royalty houses, and probably by association going on to the off-takers, people are scrambling for supply. That is a very good forward indicator as to where metals are going, and more importantly, where demand is going.
I think it's interesting, very interesting times, perhaps a conversation for another time, but money's getting cheaper from miners. I think that's the interesting takeaway from that. If we can talk about, sorry, I did want to also talk about, you've got a new chairman with quite a good reputation. Certainly over here.
Yeah, that's correct. Well, look, we were searching for a candidate to replace our long-standing chairman, Murray Black, who's carried the company from its foundations with myself for over 12 years. And Murray was looking to retire, and we had a long process looking for the right person. And Nikki Adshead really ticked all the boxes that the company was looking for in a chair. We just moved her to the chairman role at the beginning of the month. She's obviously got a huge amount of experience in capital markets in the Northern Hemisphere, in particular North America. And we're dealing with a large copper development in the Americas. These things are funded from North America. And this was all about our pivot after dual listing onto the TSXV to really align ourselves with the North American market, and also start to really increase the credentials on our board and our capabilities towards project financing discussions.
The other thing that you're going to be working on is a mine plan. Presumably, you're going to start work on that as as part of the kind of the PFS. Who's looking at that? Who's the person?
Sure, we've got a very big team working on it internally.
Yeah.
But look, it's being headlined by the old AMEC Foster Wheeler, or Wood. Wood is the lead engineer on the project. Our executive studies manager, John Hearn, is coordinating all of those activities. But you talked about a mine plan. Actually, the mine plan we've been working on for many, many years. So when I talk about high-grade satellites being added in with San Antonio, lifting our high-grade inventory to 1/3 of our resource base, over 160, 170 million tonnes now, running 0.8. That's all about the mine plan. We've been focusing on that front-end high-grade finish. We're trying to assemble a very strong first 10 years on the project so that the paybacks and the IRRs are extremely competitive on this development. And we already know that we have a very low economic hurdle project. Now we're trying to really make sure that the first 10 years of this project throws out a lot of cash flow.
Right. Okay. So that's the interesting bit here, because this company's going to move through this development phase. they can become attractive if they can demonstrate scale. And I think that you obviously you've increased the M&I component of this, but you've got to continue demonstrating the scale and the extent of this. So the exploration component, I think I would love to understand a little bit more detail, and perhaps not today, but if we can get into that and the drill planning and
the
modeling.
Primarily the focus, Matt, is on that mine plan. That's why we pushed the indicated resources up so high. We're over 80% of our book now is in indicated, which means everything with good grade can be transferred into an ore reserve when we deliver the pre-feasibility. And that was about maximising the mine plan. But the exploration upside, that is about trying to determine, particularly in the next 12 months, whether we have a third large-scale asset within our land holding. We've got a lot of targets we've developed over many years, and we've prioritised 12 high priority targets for testing this year, and we'll see. But in addition to that, Matt, there are also, we're not finished on the acquisition front. We believe that we have a really strong position to be able to further consolidate the area, and we have our eyes on a few things.
Because I think you now have 100% of the Cortadera, right? Cortadera,
that's correct,
right?
Yeah.
Okay, so that's happened. So what do you mean consolidation? What are you talking about? Where are you looking?
Other assets that we would like to see brought into this consolidation in the area.
Okay. Well, again, I guess, like you say, don't want to take too much time today because you're just hot off a plane and sound a bit croaky there. We can get into that another time. Can we just talk about the macro a little bit? Because there seems to be a disconnect between what's going on with the copper price and what's happening, certainly with your share price and others more broadly. And you had a good reaction when the Glencore story came out. Good reaction in the marketplace, but it's kind of come off a lot since then. What's happening out there?
Yeah, hard to sustain these things, Matt, at the moment. Really, from the beginning of the year. Excuse me. You're right. I have come off of a long plane flight and a little bit croaky, but
30 hours, folks.
Anyway,
he's being a hero.
No,
he's being a hero.
No, certainly since the beginning of the year, Matt, the equity markets have been very different. There's a lot of risk off. Retail is probably doing most of the trading at the moment, certainly with our stock and what I see around our peer space. Volumes are low, 20 to 30% of what the trade volume was last year. And more importantly, very, very thin buy-sell fronts. So you talked about the Glencore deal. I think we lifted 21% that day off of that announcement. Really not on a lot of trading, about $1 million traded, but that exposed that really these buy-sell fronts are probably being driven by small-scale retail trading, and unfortunately, the market's a little spooked with what's going on with Ukraine and clickbait media articles coming out of Chile. You can look at a number of things, but overall the sentiment's definitely changed this year in the market.
So what do you need to do about that, right? Because you talked about San Antonio and it's like 1.2%. Obviously it's early days and it's small, but it's sort of indicative of what your exploration could do for you. You've also I think you talked about increasing the average grade on the M&I stuff up to 0.8 in places. So exploration is going to be important for you. The PFS moving forward in terms of nailing down some real economics around this thing in an environment which is inflation driven. I'm sure every conversation I have with people doing studies is they're concerned about the increase in costs and how they negate those by better margins in terms of not just price in the market, but efficiencies on your own cost control. So what's your take on what you need to do to get retail investors to understand how you're going to take advantage of the current environment? What are the moments for you? Sure.
Look, I think it's really simple. It's always good to know what the score is, but if you're playing a game, it's not good to continually be looking up at the scorecard. We've got a game plan. Our game plan is about really taking advantage of what we've been doing here for over a decade. We are finally in a position where we are one of very few senior copper developers globally. The list is getting shorter, but most importantly, when you look at the timeframes to production, Hot Chili is actually the front runner. We've turned into the final straight, and we find ourselves out in front. There are not many senior copper developments of this scale that have a time frame to production that we have. That is because of the decade that we put into the permitting and into the level of advancement on this project. So we're aiming to have a pre-feasibility complete in the third quarter of this year, moving into project financing discussions and a completed definitive feasibility in place in late 2024. That puts us on track for production in 2026. We don't know of any other senior copper developer with that near-term production timeline. So that is the advantage, that is the game plan, and ultimately it's about executing that into this high copper price cycle. We actually believe that it's not about delivering it in 2026 because copper is going to come off. Copper is going to get stronger. Everything is pointing that way. In fact, the high oil price environment right now is just purely pushing people towards electric vehicle uptake. So there's a lot of things going right. There's a belligerence in the copper price. It does not want to go down. And we think that being an early provider for new large-scale supply is going to put us at a significant advantage. It's also going to mean that that we're going to be a very, very highly prized company for our product, and we've seen that already with Glencore coming on board.
It is, and I think that Glencore is fantastic. But everyone's grappling to secure future supply chains. Automotives are doing it. The traders are doing it, and as they should. Just one more. Thank you for that description. That of what you how you think this plays out. Just help me with this. 1 billion tons. Where does that put you in the market? I mean, is that just the beginning? Is that just good enough? Where do you think you need to get to in terms of scale to be attractive to the kind of mid tiers? Because you're 150 million market cap company, right? You have a long way to run. But what are the targets you have to set yourselves, or the targets you need to reach to be attractive to some kind of either takeout, buyout, or other?
I think that's all flattery. Sticking to the game plan and delivering on your milestones. Today we delivered on the resource upgrade in guidance on time. We delivered the offtake agreement on guidance on time, and we delivered the TSXV on time. So all of these things are about hitting your milestones. We've actually been doing that for quite some time. We may have some trouble getting assay labs to have high turnaround over the pandemic, but what's inside our control, we're controlling quite well. So you talk about what does it take, and where does the project need to be to really garner that generalist appeal. I don't think it's too far away. I think the world is really recognizing that copper is going to be the central element of what they call the clank metals, these future-facing metals that are all about global electrification. It's all great to say that the world is going to electrify and decarbonize, but you're going to need the copper to do it. And if Hot Chili is rated by S&P as a top 10 undeveloped global project, pre-feasibility level or more, and 4 of those are in the hands of majors, and that makes us 6th. And out of those 6, we have the shortest timeframes to production. I think that realization comes very soon, probably when we deliver the pre-feasibility and we move into that final phase. Project financing gets underway. We've got continuing, upskilling of our board and management. We've got new executives coming in. We'll be interfacing more and more into the North American market. And I was just over there for a week, as you said. We got a fantastic reception out of Toronto and Vancouver, and meeting with banks to brokers to off-takers to streamers. And I think that awareness is going to grow, and it's all about delivering on your milestones. So great for our team to deliver what they did today. Great for us to achieve everything we were looking for that sets ourselves up for the pre-feasibility to be a successful outcome and push us into that final definitive feasibility stage.
I think that's what I was looking for, because you're at or around your kind of 4-year average at the moment, right? Mainly because I think markets are in a state of flux about and concern about what's happening over in Ukraine. I think they're waiting to sort of see what's happening with various economies, etc. But the supply demand fundamentals don't change in all of this. So appreciate how you're setting yourselves up. I'm looking forward to that PFS moment too, and possibly looking at your share price today and going, might be time to buy.
Yeah. Well, we had a chairman in Nikki that got there, and she really looked at the share price and she said, wow, this is a fantastic opportunity now. So I think she's bought a couple of times, but it's certainly, I think a rule in life that value always rises to the top, Matt. And that's what we're building. We're building long-term value here, and we're doing what we say we were going to do. So that's important.